Today we're going to be talking about dealing with stress, fear, and anxiety with your trading. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Wednesday, middle of the week, a couple of days of some big moves, textbook perfect moves. We're going to review each British pound cross pair today, going through our simple steps and showing how I laid out those parameters with each one of those pairs, as well as the euro, and just had some fantastic feedback regarding the last few videos. A lot of emails. Just a reminder, a lot of people have tuned in. There are a few spots left for the webinar Thursday night, tomorrow, August 6th, 19:30 Australian Eastern Standard Time, 5:30 in the West. That'll be 5:30 in the Eastern States in the USA, and 9:30 GMT. Myself, Peter Anderson, and Chris Weston. I just got off the phone with Chris. We're going to be talking about big picture charts. I'm going to probably talk mostly about the British pound crosses, but as I mentioned to Chris, I do follow the majors. We're going to be looking at some bigger patterns that are in place on some of the other global markets. And again, as I mentioned, speaking to Peter yesterday, I think he has a wealth of knowledge, and some of the stories that he shared with me I think will be very powerful for traders to tune in. It'll be about an hour long. So again, if you haven't booked a spot yet, there's a few left. Grab your spot. It's going to be a fantastic night. Dealing with stress, fear, and anxiety. So I've had a few emails in the last week or so and been going back and forth with a couple traders regarding stress, fear, and anxiety. A very normal emotional response when you're dealing with trading. Obviously, you're risking your own capital. You face the potential of losing not only small amounts, maybe large amounts, especially if you are still sort of developing your skill set. And coming back to the first and foremost important thing, don't risk significant or money that you cannot afford to lose until you develop your skills and an edge and that ability to perform in live time. Do not lose your money. Learn on a demo. I mentioned yesterday, I personally don't like to do that, but even if you're just starting out with a small amount and using micro lots to not only hone your skills, but to craft your edge, even taking bits and pieces. I've taken bits and pieces and personalized that by working backwards, knowing what happens and how things unfold in live time, how I perceive the markets, how that uncertainty and that fear of missing out or fear of holding on to a trade and getting stopped out after being stopped out, and you want to take money off too early, all these little things that cause us to interfere with our system performing to the best of its ability. So dealing with stress, fear, and anxiety, first and foremost, if you are feeling those emotions, what that boils back down to is uncertainty. You have uncertainty whether you trust yourself. In my particular case, the things that I worked backwards from dealt with these emotions. I can go to the screen almost down to the 15-minute bar now based on that hourly rotation. I talked about this. It happened yesterday again. In that equities hour, they hit the high of the day on a few of the pairs. They pulled back into a breakout on pound Canadian. In that equity hour, in the US session, they reversed the market for 50 pip moves. So I worked backwards to create certainty in my process, to create certainty in my emotional orientation to the markets. And I just chatting with Chris today, there's a lot of potential energy building in some of these global markets, and there's uncertainty right now about big explosive trends possibly just at the beginning of their move, or we could be at a point where those markets all of a sudden consolidate and the expectations of these big moves doesn't evolve. Gold, oil, equities. We're at an unprecedented times in terms of the information conflicting with what's happening in the markets. So, as I said to Chris, when it gets like that, I just come back to my basic system and I go back to the timings, the high and the low of the day. That helps me create certainty. That helps me create certainty knowing that I need to see these patterns present within that window for them to have validity to me. And that's what helps to gradually reduce the anxiety, the stress of maybe not only trusting yourself to do the right thing. For myself, I know when there's a lot of uncertainty, I just dial back in terms of the kind of risk I'm prepared to take. And then I remind myself through stepping outside and observing my own behavior, and I talk about this, going back and reviewing your charts and knowing what a perfect setup looks like, so that when you're in live time, you can talk to yourself, a silent observer over your own shoulder, reminding yourself that if you can't see a perfect trade setup in live time, if it doesn't look like that, and you know that when you review tomorrow you're going to see a perfect setup, I know there's going to be a 50 pip move. There's a 50 pip move every single day, bar a Memorial Day or a holiday in the US when the markets consolidate after London. But there's going to be a 50 pip move today. We have BOE tomorrow. We have payrolls at the end of the week. I don't know, maybe they're working the low for a big move up. Maybe they're stop hunting down into longs for a move up. We could be at a point where the British pound is going to continue to move in a strong upward direction. But I do know this. When I go back to the screen today, at those times, based on the 3-hour high and low in Asia, I'm going to be able to use that information and then the timings to determine whether or not indeed I have an opportunity to position myself in the market. And based on that setup, is it a trade that I'm prepared to increase size on because it's an A+ setup, for a squeeze, for a measured move, for a trend trade? Or is it just a third burst, possibly to the low for a 50 pip stop hunt, a trap, or a level 3 day when they're going to go both sides? All those little things. But that's what will allow you to step back and realize that the stress, fear, and anxiety comes from having uncertainty possibly in your edge or your process or your approach to the mechanical approach to the markets, or you don't trust yourself in terms of doing the right thing, not taking impulsive trades, not getting angry and trying to revenge trade, not deviating off of your plan. I would go to the screen, I would have a plan, I would go to the screen and do something completely different, and then afterwards go, why was I doing that? So you need to have that confidence and that certainty, not only in your edge, but in you, the trader, to do the right thing. And if you don't have that, find the solutions based on the problems that you're seeing repeat themselves or showing up in your trading, and work backwards and construct the steps and the habits and the routines that are going to ensure you can keep building that confidence daily to execute your process, but also in you, the trader, to be doing the right thing. And on top of that, improving in live time your ability to execute and stay emotionally orientated to get the results that you're after. So, just on that, we're going to review, we're going to go through each of the pairs, but we're going to just talk again about the importance of the Asian 3-hour high-low. 8 to 11 p.m., 2 to 5 a.m., and 8 to 11 a.m. New York Eastern Standard Time. Asia, London, New York. When I come to the screen, we may already have a peak formation in place. We could have a breakout already in Asia. We could have previous days high or low broken already. These are all important things, but what is really important to me is, do we have a high and a low of the day? So I talk about being inside of previous ranges, previous US session, previous London session, highs and lows. But if we are inside of a consolidation, that high and low of the day for Asia will often be either inside of numbers, a quarter level. It could be trading around the numbers in a 50 pip box, where the median price then becomes that quarter level. And I talk about this as well. Where is my 50 pip box? Are we working towards yesterday's low? Have they pulled it up 50 to 75 pips for a move down? Or have we worked it down 50 plus pips and gone into consolidation in Asia? And then in that first hour, so for example, we didn't have some lows in place until just prior to the Europe window. So we get a low of the day put in place when they engulfed in the Europe Open. So I know in my first hour so far we're working up. We're inside of the high and low, we're working up. We're working up, we're working up. The London hour opens up top. We get an engulfment at round numbers at double zeros on the pound Swiss for a 50 pip move down, a pullback of 25 pips, and a continuation down through the low of the day for a measured move of that larger geometrical shape from the high and the low, heading back down to the previous day's low. So again, stepping back and not chasing the impulses, and that is your choice as a trader. I am looking for the trades that are coming at the highs or lows of the day. So if I'm in a down template or the market is working the lows, I'm expecting they may come out of the bottom and then stop hunt the high of the day. They're going to stop hunt high for a move down. Now, sometimes as we get towards the end of that template, we may start to, as I said before with level 3, the move may accelerate with the trend, taking traders with the move, stop hunt back into the low of the day or into the high of the day for a continuation move in a trend trade. Now, there are squeezes for big moves, for geometrical range expansions, and there are also blow-offs or level 3 trades when they end up working both sides, 25 to 50 pips and vice versa. We typically will see that with the Fed. We may see that because we've got BOE and payrolls this week, but again, it's not out of the question to see them drag the markets lower and possibly reverse with the original trend. We've had the beginning of the month. We could be getting a 1, 2, 3 days down into the trend for the move back up. Then I talk about the timings, specifically that middle hour, the equities hour. And yesterday was a great example of where the equities hour dragged traders up high in the pound New Zealand. Pound Oz was already down low, but they worked it up into the move sideways for the continuation down. But that equities hour can often be the trap or the trade. So again, building a thesis prior to the session open, understanding that if I think the market is going to head down, the market may take me down at the open of Europe, but I may get a stop hunt high to the high of the day, hitting stops, triggering breakout orders, hitting profit taking orders. If it hits a previous day's high or low, triggering other time frame traders into the markets, but then again reversing possibly for the continuation with our thesis. So again, a 1 bar stop, 1 ATR stop, and targeting 50 or more pips depending on the move. So again, one of the questions I had earlier in the week was I'm trailing positions, I'm taking money off, but then I miss the bigger move. One of my golden rules is that if I'm trading with the general direction of that trend, whether it's a 3-day trend or the overall trend, whatever that may be, I'm looking for the measured move of the geometry of the day and possibly the upper or lower rectangle. But if I am counter trending, as we saw last night in the US session, back into the traders that are already in profit, typically you'll be looking at 25 to 50 pips. As we've talked about before, the average stop hunt is usually 25 to 50 pips. Even with the Asian session, if the market breaks out prior to me getting there or in that 12 candle window without a pullback or anything else, I will look at the quarter levels above or below as a potential area for that market to give me either a stop hunt trade back into the range for a reversal if it's again 50 pips into the trend for the continuation, or if it's a breakout trade, we'll be looking for the 1, 2, 3 back against the trend for the continuation in the original direction, at which point you can then measure the high and the low of that breakout pullback for a measured move for the continuation in the direction of that trend. And we'll go through some examples of that. Round numbers. So again, we talk about the majority of all these trades will be coming off of numbers. There'll be a 50 pip box, usually 50s to double zeros. Yesterday was again textbook on a couple of the pairs, double zero, 100 pip moves. Engulfments and pin hammers. In a lot of cases, we will get both. Sometimes, as yesterday on a few of the pairs, we just had the engulfment. They brought it up to the high of the day, locked it in with one engulfment, but that specific engulfment pattern took out 3 candles, and that's what's important. The other side of the coin was the reversal last night in the US session occurred at the 3rd candle of the equities hour. But if you understand how that engulfment of 2 candles on the 3rd candle of that middle equities hour, when that hour closes now, that is a pin bar on the hourly chart for the move back up against the trend. Very important, and we'll review that. So again, 1 ATR, 1 bar stop at the high or the low, and I'm targeting 50 or more depending on the setup of that particular trade. It could be a measured move or it could be a stop hunt. And if it's a stop hunt and we get to 25 and it's hitting a level where the market's already reversed, so some of the pairs went 50, some of them went 25. You need to be able to recognize when that consolidation happens that that move could be over. Okay, and then trade management, when to go to break even, when to get paid. I go to break even typically when that market has moved 35 to 40 pips, if we're near round numbers or the high or low of the day, or if it's cleared a quarter level. So if it's a 50 pip move and it goes through the next quarter level, I'm at break even, because if it's a fast, strong move against a creeping trend, that market should not come back once it clears the quarter levels. Not until that move is over. Getting paid. So if you're up 35, 45, 50 pips, 75 pips, you need to understand, I go to the screen knowing that I'm going to lock something in. I went for a long time, I'd be in profitable trades and I wouldn't be locking it in. It would come back and stop me out. I'd be holding on for a bigger and bigger move, not understanding that these markets will come back and make sure that most of these profitable trades will get stopped out, at least at break even, if not for a loss. You need to get paid. So you should be, even if it's a 25 pip move and you lock in 15, like if it gets to 35 and you're holding on for 50 and all of a sudden it's back down to 15, I hope you get paid. So knowing that when the move could be over, if it's a nail and bail 25 pip blow off or stop hunt, understand what that stop hunt looks like. It'll be a vertical candle. Typical yesterday was a great example, pound New Zealand. The London Open, boom, 125 pip candle. The next couple candles were small. That is a stop hunt. So make sure you're taking something off the table. And then self-management. All these steps I built, and I keep just constantly staying on the simple system, because that's what eliminates stress, fear, and anxiety and helps me create certainty in my process and in my headspace and my psychological capital every single day when I go to the screen. Patience, awareness, observation. Be aware of your own behavior. Be prepared to sit and wait. The reason I have the numbers on the chart, the reason I pay attention to the clock, all of this is critical to my understanding of the market and my beliefs about how I trade those markets. I know there's going to be a 50 pip move. I know when that first hour goes, it's either going to be a breakout, a stop hunt, or it's going to be at the low or the high of the day already. And I know when the equities hour opens, they're going to either hit it a second time for an M or a W, or they're going to continue the move if it's a breakout pullback, or as we saw yesterday, they might have brought it down on the open of Europe and then went up to the high to hit the stops up top in the London Open. And then review, assess, and improve. Again, simple, repeat the process. These 3-hour highs and lows are critical. So just coming back to a point another trader made to me earlier in the week, he said, if I see the high or the low get reversed outside of that 12 candle window, I'm hitting it. I know Stacey doesn't maybe do that. I am not ruling any of those trades out. What I'm getting at with that 3-hour window is every 3-hour block has a reason for being there. So if they extend the range in Asia, that means we have a high and an extended low, which means now if they pull back up and go into the high of the day or the low of the day, our geometry just got bigger, because they're going to go back at some point, unless that's a peak formation reversal at the low of the week or the high of the week. But all of that information is very valuable, especially if it's between London and the US, because if they go to the high or go to the low and lock it in heading into the US session, as I keep mentioning, I do not counter trend the peak formation. So if it's a reversal to lock in the low of the day and I get a pin hammer at the US Open in the 12 candle window, I can still get a breakout pullback, but I'm going to get a pin hammer and a pin hammer, and I'm going to hit those trades. And we're going to be going back to the other side of London or to the low of the day or the high of the day for probably at least 50 pips, if not more. So again, that comes back to our overall thesis about, are we looking at a down day, an up day, or are we looking at a range bound day, or is this a stop hunt? Is it a trend trade? All those little things where, again, I talked about this yesterday. It's an evolving dynamic organism where all of this information is processed simultaneously till it becomes unconscious competence. You're just constantly thinking, what time is it? Am I at the high of the day, the low of the day? Is it the end of the hour? Are we into the equities hour? Is it the third candle? Is that a 2-bar engulfment, a 1-bar engulfment? Is that the first leg, the second leg? All these little things. So just coming back to simple stuff, high and low of the day, 25 to 50 pips, either from a previous day's low or high or outside of the Asian range as potential strike zones. Then, are we looking to sell high today or buy low? What's the pattern of the trend? What time is it? Going through our simple steps. We'll look at each one of the pairs now from yesterday, going through this simple process. And as I said, every single pair yesterday fit this criteria. So hopefully you got some value from today's video, traders. Stress, fear, and anxiety create certainty not only in your technical approach, but in your emotional orientation, knowing and certain of yourself that you're going to be doing the right thing. Again, lock in your spot for tomorrow's webinar. It's going to be a great night. And keep it simple, traders. Let's take a look at yesterday's trades. Have a great trading session, and may the markets go with you.
G'day traders, Stacey Burke from Stacey Burke Trading, just reviewing Tuesday, August 4th on the British pound crosses, and we will look at the euro as well. Just coming back to my basic approach, the 3-hour high low in Asia. You can see we've marked off the previous US session high of a high and a low, but we also are inside of peak formation high from previous day's London session, as well as the rollover, the low of the day. The market pulls back into consolidation, and in the beginning of the session hits the high, engulfs it, drops down inside in the equities hour, goes sideways, and then works the low of the 83.50 level. So again, between 75 and 50 before pulling back, hitting the low again, pulling back, breaking through the low of the day, and then pulling back 1, 2, 3 bear pin hammer. So we've got a breakout pullback into the 83.50 level. So we were in a 25 pip box. The market breaks down through the low of the day, the 3-hour high low, which again, we're in a 25 pip box, breaks through, pulls back 1, 2, 3 bear pin hammer at the open, or right near the open of the 12 candle window. So we've got a couple of scenarios. One is we have our anchor point low and we have a bear pin high for a possible measured move down. But we also have larger geometry now for the 3-hour high-low window of Asia for a possible measured move if this market continues down. Coming back, though, to our primary premise, we broke the low of the day. One push into the low of the day continues the move down. 2 pushes at the open of London. Stop hunting into traders that are already short. Market is breaking out, pulling back, breaking out, pulling back. Goes into consolidation in the London hour. This is really important to understand the hourly rotation. Stop hunt up, big candle up into the move. We're in a down move. There's no evidence of a bottom here. This pin hammer has been pushed into at the end of the hour, but then engulfed. Then the market trades back inside of that pin bar low of the day, which did not take out the previous day's low, before shifting away in an open drive candle. But more importantly, understanding the hourly rotation. 1 hour down. This hour was an inside hour, inside of a downward moving market. Breakout, pullback, continuation. Some traders got in at the numbers. Some traders got in at the break of the bear candle at the end of the London hour, expecting the continuation down. Other traders waited for the breakout candle to get in, and they were still able to have a 1-bar stop. This is a strongly moving market now that London is open. We've got a high of the day in London, and that move continued for 50 pips before going into consolidation at the low of this pin, where they put in a low of the day. They put in a low of the day on this bull candle. That became our low bear candle. Then they proceeded to stop hunt the low of the day, 1, 2, 3. They worked the low, pulled it back, worked it again, pulled it back, worked it a third time, doji bull candle, pulled it back into consolidation, going sideways and then breaking the low. But high of the day, low of the day in our 3-hour Asian window. Breakout, pullback. Breakout, pullback. Breakout, pullback, continuation. And we had a larger geometrical structure. We could even just look at 50 pip box. We could look at 100 pips from that move, which this market almost completely got there, but that pin down to the lower box, but this was a 100 pip range. Pound Aussie. Looking at the pound Canadian next. Actually, I'll put that in here just so people know. Pound Canadian. This market, again, traded sideways inside the U.S. session, peak formation, high-low. Went into consolidation around the double zeros before working the high in Asia, pulling back. And again, now we have a high of the day, we have a low of the day in our 3-hour window. The market goes into consolidation in the middle of the range before breaking out, hitting the swing lows, stop hunt, consolidating, and reversing at the London Open. So, again, 1, 2, 3 into the move from the high of the day, getting traders at break even. But the 1, 2, 3 is important to recognize. This is a stop hunt. And this third candle is inside of the wick. The body is inside of the wick of that candle. Some traders shorted the break of this candle yesterday. Other traders got in on the engulfment, which again, 1-bar stop, bigger. Obviously there's just experience. For some traders told them that this in the equities hour, this was a stop hunt. Either way, you've got to stop above the high or above this candle. And when this market takes out the low of the day, we now potentially have a geometry for a measured move. So I typically will look to target 2 full expansions, but again, when this market goes into consolidation or goes 1, 2, 3 down in the U.S. session, I typically may look to be getting out at numbers if I'm not out already. But this market came back with 1 push, 2 pushes, 3 pushes into the low of the day, 1 push, 2 push, 3 pushes, and then we have the pin, this 3-bar candle formation. This is you'll see this a lot. This pin hammer at the high. Okay, I'd be looking for the engulfment if I wasn't in this trade already for the move down back through the low. Which again, if we were to target a measured move, timings are important. This market does a full expansion down, but we're into the U.S. session 12 candle window now, and I'd either be getting out at numbers if it hadn't hit my 50 pip target, or somewhere in this. Again, we're at the quarter level, but as soon as we get towards the end of this hour and it's a 1, 2, 3, you got to be thinking this market potentially now will come back for 25 or more pips to stop hunt traders who are short in the market. Pound Canadian. High of the day, low of the day, breakout pullback, continuation, timings. Okay, the equities hour took traders further into the stop hunt before reversing. And you notice this reversal is quick because it traps all this volume chasing the momentum. And then round numbers, engulfments, and pin hammers. I did not take the pound Aussie or pound Canadian, but I did take the pound New Zealand. So again, Market goes into a 25 pip consolidation. They give us a low of the day at the opening of the equities hour in Asia, and then they engulf it. We're inside of a 25 pip box. The market goes sideways, traps traders inside before hitting the low at the end of the first hour, and then in one big burst at the London Open, which is 30-some pips, they hit the high of the day. And this candle, if you watched it in live time, definitely had traders chasing this move long, thinking that this was going to be a continuation from the peak formation low on Monday. But then the next candle was a doji bear pin. We're below double zeros, and again, just to reinforce, 25 pip box, 25 to 50 pips, and we're 25 pips above the Asian range at the double zeros. And then we get a 1-2 little bull candle inside of the third candle's wick below the double zeros, and again at the previous day's high. Then we get the engulfment candle at the first candle of the third hour. Now, I do know some traders shorted it up just below the double zeros. Some traders actually got in at the short of the bull candle, knowing that they may hit the high again. So often when you get a small candle, they'll sometimes tap the high or the low one more time. But you gain, even with a 20 pip stop, was nowhere near this. But the engulfment came back inside of the high of the day. They pinned it one more time. Some traders may have fought for a better price or a limit order on the wick, plus the spread, whatever. Just little things that experience will allow traders to learn. I was in this trade. I went to break even when it got down to the low. Went into consolidation. I left it with my 50 pip target. When I got home, the market was just breaking the low. And then I realized when I looked at this, that this market potentially now was going to do a measured move. I had a 50 pip target, and I was watching this as it broke through. And as I went to change my profit target, I was going to move it another full quarter plus the spread off the numbers. It broke through super fast and hit my profit target. And then I watched it move down almost another 50 pips. But again, it did pull back and hit that. And I also accepted that, my initial interpretation was for 50 pips. And that measured move would have been a bonus. But again, you try to squeeze as much out of a winning trade as possible. And I'll still take the 50. So could have got more, could have traded that a little bit better. I actually could have got a better fill price as well. I just seemed sort of fixated on the pound New Zealand yesterday, and you live and learn. You make decisions in live time, and you try to review, assess, and improve for the next trade. Pound USD, this is a great example of peak formation high, peak formation low, London, US. They pull it back and go sideways into consolidation before giving us our 3-hour high and low in Asia. So again, just 3-hour high and low. Draw the highs and lows. They hit the low just prior to the 12 candle window. They pull it back inside, and then the Europe hour breaks above the numbers. So again, the quarter level in this particular case is the median price, and 25 pips above that takes us up to double zeros, which was been a stop hunt on the previous London session shorts. A 25 pip move, if it came down, would take us down to 50. So we're in a 50 pip box. The market in London bursts to the high, hitting stops, one push sideways, pinning the high, and then third push, little bull pin hammer to the high or near the high of the previous day, but it obviously got stops at break even. Again, an opportunity to either short the break, short it at numbers with a 20 pip stop, assuming that traders are under the assumption if they get in earlier or they're on a smaller time frame that it's already locked in, but this engulfment locks in the high of the day at that particular time. That candle is the last candle of the second hour, the equities hour. So again, they take traders in the wrong direction, but when you consolidate these 4 candles, this becomes a pin bar on the hourly chart, and that is a pin to the high. And then the market bang, bang, 3 bars to the low of the day, at which point I went to break even. I got filled. Sorry, this is the pound, but on the pound New Zealand, similar. I was filled up a little higher. But in this particular case, even traders who got in at the closing price, this wick gives you an example of where you could have fought for a better price on the retracement back to fill the gap. Then the market pushes back 25 pips up into the trend. Stop hunting traders who have possibly had a trailing stop. Again, another reason why I don't use a trailing stop. Or maybe even try to get traders at break even. But there was a 3 pip space there, even for traders if they got filled at the close, where it did not get them, if they were filled well enough, before continuing down through the low of the day. So again, we have geometry. The market moves to the previous day's low, and then noticing the first few candles. They give you these pins, but then third candle bursts again through the previous day's low, gives us the pin, and the last candle of the first hour closes just near the end of that pin before we pull back inside with the inside bar at the first candle of the equities hour. A little bear candle, the last grab at the cash. This is a dead giveaway. As soon as they engulf this candle, traders had the opportunity to trade the stop hunt back up. The fourth candle of that second hour confirms this reversal hour as a inside bull candle reversal. Nothing to stop this from going back. The first candle of the peak candle of the hour of the 12 candle window gets broken. This market had at least 50 pips of space to go back, getting traders at break even. Pound yen, again similar, just looking at our peak formations. We're inside of a big box. Looking at our numbers, the market trades between 75 before giving us a peak formation. After hitting traders at break even, it drops down. We then have our Asia high-low, our 3-hour window high-low. Comes into the 12 candle window. I did not particularly like this setup for myself, but the market, if this was going to, in that first hour, break through to the highs, it would have done so, but it pulled back before giving us the first candle of London, going sideways, and then we get the pin, the reverse pin. Stop hunting traders who chase the swing trade, and also traders who have gone to break even. And then it engulfs on the last candle of the hour. So again, another example of a pin bar on the hourly chart before moving away quickly, and then working in 3 pushes, 1 push, 2 push, 3 pushes into the low of the day, as well as into the round numbers at 50. This is into the move from the breakout pullback swing low off of 50 from the rollover after the U.S. session. So 3 pushes into the low of the day. We have geometry. We have our bigger structure. We have a breakout and a continuation after the stop hunt. So high and low of the day, timings, round numbers, engulfments, pin hammers, 50 pips. Pound Swiss, another example. Again, peak formation, pull it back, go into consolidation. The market trades sideways after the rollover. Again, another example of where they just hit stops in the rollover, pull it back up 25 pips and go into consolidation. Staying inside of the peak formation from the U.S. session. Breakout below the double zeros and then pulling back in 1 push, 2 push, 3 pushes into the open of London. This last big bull candle hitting the high of the day is the first candle of the equities hour before engulfing that first candle. So second candle engulfs the first candle of the equities hour. That's locked in now. A 1-bar stop. We have geometry now for a measured move, as well as potentially targeting the previous day's low. This market moved very strongly through both expansions. Another opportunity when you see a market moving this hard to rethink your profit targets for potentially more than 50 pips. And that's up to your discretion. But in my particular case, every time it gets near a number level, you need to be paying attention. When you get large candles, this move is definitely not over. We get into the first hour, we see 1 sideways, 2, 3 pins on the bottom, inside bar. And then the second hour, first candle is an open drive candle engulfing the low pins above double zeros for a 50 pip fast move back up, getting traders who chased the move down on the last leg. High of the day, low of the day, 25 pips to 50 pips inside of numbers, hit the highs, 12 candle window, equities hour, engulfments, and pin hammers for measured moves in bigger picture geometry. And lastly, looking at our euro. So just again, coming back and looking, we saw the Asia 3-hour high-low get set. They hit it a second time in that roll extra 3 hours. They pulled it back, and then in the Europe-London 12-candle window, they hit it a third time, but gave a pin hammer at the last candle of the first hour, which is a dead giveaway for a continuation at the open of London. London opens and goes 1, 2, 3 to the high, hitting the previous day's high. This triggers other time frame traders, obviously. Triggers breakout orders, stop losses, take profit orders, whatever they may be. But it goes to the round numbers, small bull candle. Some traders traded this engulfment. Now, they asked me why this did not work. Understand that so first of all, we're at the high of the day. We get a smaller geometrical structure. We have a W formation, a rectangle, whatever we want to call this, and then a pin hammer on the close of the first hour for the continuation. Breakout, consolidation, continuation. Breaks the previous day's high, which was earlier in the session. This is a breakout pullback. This is an engulfment, but it's a breakout pullback. It is not a high of the day just yet. It may be. We don't know this yet, but this is a breakout of a move. This is different than hitting the high of the day and getting an engulfment. This is a breakout. And then we get a 1 sideways 2, 3 pin bar. Pinning traders who are long, getting them stopped out of break even from that first hour. And looking for the continuation for the measured move long. Traders take this trade, but we get a 1, 2, 3 to the high. And then fourth pin at the third candle of the fourth hour outside of our 12 candle window before engulfing. So we get a 3-bar reversal at the high of the day on a 1, 2, 3 pin to the high, second pin to the high, engulfment, 3-bar reversal pattern, and a larger M structure. So some traders may have been thinking high of the week at the previous day's high of the day. They put in for possibly a measured move to the previous day's low. And again, if you are holding on for more than 50 pips, as we get into the next 12 candle window, we break the second full expansion, but the market goes 1, 2, 3 sideways inside bar and stays consolidated at the numbers for 4 bars. So if I was in this move holding on for more, I've talked about when the market goes into consolidation for that extended period after we've extended beyond the 50, possibly getting out at numbers, or moving your stop down above the expansion or above the bear candle, locking in 50 for sure, or looking now to exit the trade and possibly enter on the reversal. 1 push, 2 push, 3 pushes, and then we get the reversal engulfment on the second candle of the third hour. So we get our tweezers, and then we get the engulfment. And again, on the hourly chart, this last fourth hour would be indicative of some kind of pin reversal or open drive candle, as we see that market just bang, 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 and reversed very quickly back through to the high of the day, possibly giving us a peak formation. So again, high of the day, low of the day, timings, round numbers, engulfments and pin hammers, highs and lows, geometry for measured moves. Keep it simple, traders. Hopefully you got some value from today's video. Keep it simple. Keep getting better. Have a great trading session. Stay disciplined, stay focused, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset.
I appreciate all your feedback and comments. As always, traders, stay disciplined and may the markets go with you.